Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has taken many casualties over the last few days as the bears continue to push to the downside. But do note, we do have a hammer candlestick just been produced a couple of days ago, which has turned the market around since briefly looking under the level of 70 cents and posted a low of 69.87, its lowest level since the early January flash crash. Looking ahead is the fact the market is attempting to take the challenge to the upside with the resistance seen at 70.65 and 70.90 figure. However, I do expect to see this as a sell opportunity as the market's still poised for a further test down with the immediate support seen at 70.15 to 69.40.60 as an objective and the yearly target. As you can see, we've got a bit of a bullish outside range day possibly coming into play after the knee-jerk reaction to the downside on Friday. As the tickets continue to be sold for this roller coaster week, the global markets start with the federal rate decision. And then on Friday, we have the non-farm payrolls. Along with that, we do also have the US and China trade talks. They start up again this week. It is widely expected that the Federal Reserve in the US will keep their interest rates on hold at the outcome of its two-day meeting starting on Wednesday, with the announcement on Thursday at 5 a.m. Sydney time. In the March meeting, the Fed indicated that they would continue to keep rates on hold for the rest of the year amid expectations for a lower pace of economic growth. Last Friday, the US economy expanded at 3.2 annual pace in the first 3 months of 2019. The Bureau of Economic Analysis said on Friday that the gains were well above forecast and also crushed the economists' forecast of 2.3 increase in growth domestic product. As I mentioned, we do have the non-farm payroll report this week, and the market will be closely watching to see the gains of 181,000 jobs. This could actually see this level just from previous of 196,000, with the unemployment remaining steady at 3.8%, and with the average hourly earnings also remaining at a forecast of 0.3% from previous of 1.1%. My expectations that the market probably will fail towards the test of 112, either of around 55.75, with a minus of resistance seen at 111.75. I do expect to see further test down and look towards the region of 110.70. The dollar yen did sell off after posting a possible weak gravestone inside this engulfing candle, but direction is still from a technical point with the RSI and the MACD marrying that we are looking for a further weak play to the downside and look towards 111.40 to 110.70.80 as a target, with any advances found in around 112.20 to 45. This descending triangle is still holding to a bearish case, as the market still at this point hasn't taken out the top side of 129.70.90. I do expect to see maybe a test to the top side, as I mentioned in the report. We do often see test break levels retested, so this is where we're looking for, which could give us a sell opportunity. This week also, on Wednesday, we do have the Bank of England's monetary policy meeting, and therefore could see a little bit of a knee-jerk reaction, but it's widely expected that the Bank of England will keep rates on hold. The gold is progressing further to the upside since the rebound of 1266, but we do need to clear 88 to get further confirmation to support the bullish case. If so, then we could see a move up towards 1,300 or higher, with the marriage between the MACD and the RSI is very supportive for this move up. Oil broke down further on Friday and crushing the trend level of $63 a barrel and losing 3.5%. It is assessed from the weakness could see further declines towards $61.5 to maybe $60 a barrel, with the resistance seen at this stage at 63.5. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the each day report, and I hope you enjoy the great start to the new week.